All right, today we are diving into the world of Forex. What is it? Well, it's the biggest financial market on the entire planet, and believe me, it has a much bigger impact on your daily life than you probably think. So, let's get right into it.
You might not even realize it, but you're interacting with the Forex market all the time. That coffee you're drinking. If the beans were imported, Forex had a hand in the price. The gas for your car? Forex. Even the budget for that dream vacation you're planning. Yep, all of it is touched by these constantly shifting currency values.
So, what's the invisible force that's tying all of this together? It's the constant 24-hour-day exchange of one country's currency for another. And that really brings us to the heart of what Forex is all about.
Okay, let's start with the big picture. What exactly is Forex? We're talking about the world's biggest market, so let's break it down. First off, the name Forex is just a simple mashup of two words: foreign exchange. Just think of it like a giant global flea market. But instead of selling vintage clothes or furniture, this marketplace only deals in one thing: the world's currencies.
And when I say giant, I am not kidding. Every single day, over $6 trillion changes hands in the Forex market. To give you some perspective, that absolutely dwarfs all the world's stock markets combined. It is without a doubt the heavyweight champion of all financial markets.
What makes this market so unique is how it's structured. For one, it's decentralized. That means there's no single headquarters, no big building like the New York Stock Exchange. It's actually a huge network of banks, brokers, and even governments, all connected electronically. And because it's global, it literally never sleeps. It runs 24 hours a day, 5 days a week, basically following the sun from one financial center to the next.
So to even begin to navigate this world, you have to learn to speak the language. And trust me, it has its own lingo of codes and pairs that you need to get the hang of.
Every major currency has an official 3-letter code, like USD for the US dollar or JPY for the Japanese yen. But traders also love their nicknames. So you'll hear people talking about trading the Aussie for the Australian dollar, or the Kiwi for New Zealand's dollar, or even the Swissy for the Swiss franc.
Now this is super important. Currencies are always traded in pairs. The first one listed is called the base currency, and the second one is the quote. The key thing to remember is that the base currency is always equal to 1. So that number you see, that's just telling you how much of the quote currency, in this case US dollars, it costs to buy one single unit of the base currency, the British pound. So this leads to the actual trade. If you buy a pair, traders call this going long, you're basically betting that the base currency, the pound, is going to get stronger against the dollar. If you sell the pair, or go short, you're betting on the opposite, that the pound is about to get weaker. It's really just a constant tug of war between the two.
Okay, so you're in a trade. How do you actually measure if you're making or losing money? Well, it all comes down to this one tiny little unit of measurement that's pretty much unique to Forex.
And that unit is called a pip. It stands for percentage in point, and it's basically the smallest possible price move a currency pair can make. Let me show you what I mean. Let's say the price of the Australian dollar versus the US dollar is 0.6751. Now, really zoom in on that very last digit, the 1. And boom, the price ticks up to 0.6752. See that? That tiny change in the fourth decimal place? That was a 1-pip move. And counting those pips is exactly how you track your profits and losses in a trade. All right, nothing in life is free, and that includes trading. Every single trade has a built-in cost, so let's quickly break down how that works. So the cost of a trade isn't some separate fee. It's actually baked right into the price you're quoted. You'll always see two prices for a currency pair, and the difference between them has a special name, the spread.
Here's the simple version. The ask price is what the broker is asking you to pay if you want to buy. It's always the slightly higher number. The bid price is what they're willing to bid to buy it back from you if you want to sell. That's the lower number. That little gap in between the two, that's the spread, and that's your cost for making the trade.
Okay, last section, and this one is critical. Let's talk about access and risk. How does a regular person even get into this market? And what's the one incredibly powerful and also incredibly dangerous tool that everyone uses? See, the Forex market is mostly a playground for huge institutions, like the big banks. So for an individual trader, you need a way in. Your gateway is a Forex broker. They give you the software and the connection you need to actually place trades on the market.
And probably the most important tool that a broker offers is something called leverage. In a nutshell, it's like getting a short-term loan from your broker.
that lets you control a much larger position in the market than you could with just your own cash.
The best way to think about it is, well, like a literal lever. Just like a small lever can help you lift a massive rock with very little effort, financial leverage magnifies your trading power, letting you control a huge amount of currency with a pretty small deposit. But, and I cannot stress this enough, leverage is a huge double-edged sword. Yes, it can magnify your profits from tiny price moves, which is amazing when you're right, but it will magnify your losses just as quickly and just as powerfully when you're wrong. It basically just turns up the volume on everything, both the good and the bad.
And that really brings us to the final, central question that every single person interested in Forex has to ask themselves. With its incredible size, its 24-hour access, and the mind-blowing power of leverage, is this an unprecedented financial opportunity, or is it a massive, often underestimated risk? The answer to that is up to you.